Good afternoon, everyone. My name is John Kiernan. I'm proud to be the president and CEO of a company called Alico. It's located right here in Florida. We own about 54,000 acres of land. And on that land, we grow oranges, which we sell to Tropicana. So if you've had Tropicana orange juice recently, that's our stuff. We're listed on the NASDAQ. We've been around for about 125 years. And I'd like to tell you a little bit about our business today. So as I mentioned, we're a Florida-based agriculture company active in citrus and in land management. 52,371 acres. On top of that, we also own 48,700 acres of oil, gas, and mineral rights. Again, all located within here in the state of Florida. We're here talking to you today because we seek to provide our investors with the benefits and stability of the conventional agricultural investment that we operate day to day, the optionality that comes with active land management. Our largest asset, obviously, our land. And our land is primarily in the center of the state in about 37 different locations. 31 locations here, but some of them are really, really kind of small. We're in 7 different counties. As I mentioned, we're the top citrus grower in the United States. Most of the oranges that are grown in Florida go into the juice market. What you see in your supermarket in the produce aisle, that typically is going to come from California. So everything that we get here in the state of Florida typically is going to go for juice. We've invested for growth over the last decade or so. So since 2017, we planted about 2.5 million additional trees, which are reaching full maturity right now. So we've invested for growth on the acres that we currently own. And as a land company, let's talk a little bit about our land holdings. Again, we're looking just as our operations today. So if we were going to sell our land to another agricultural player, so this is farmer prices, farmer to farmer, we own about 5,000 acres of pasture land. Management estimates that's somewhere between $4,500 and $5,500 per acre, which suggests somewhere around a $23 to $28 million value. The citrus acres that we have are 48,250 acres. Again, farmer to farmer, somewhere between $8,000 and $10,000 per acre, which would suggest, again, a value of somewhere between $385 and $485. Add those together, somewhere between $400 and $500 million. Our enterprise value today is right around $300 million. We've got about $200 million of market value, and then we're holding about $85 or $90 million worth of debt. So I'm sure if you've been here for both days, every company you've talked to is thinking that they're undervalued from a share perspective. We're just looking at our breakup value. If we sold our lands just for parts, then we're substantially undervalued relative to that. And one of the reasons we're here at this conference is because we're trying to get our message out so you appreciate what we have. Because in addition to operating citrus, the land could have highest and best use somewhere other than agriculture. So we're backing this, basically this page back up here. We're backing this up with facts. So we looked at all the citrus land sales that happened in the state of Florida over the past year, and lo and behold, it's somewhere between $10,000 and $11,000. So we felt pretty comfortable giving you that range of 8 to 10 to be safe. But if we look at the highest and best use, it's not necessarily always going to be agriculture. So we've got some groves that are located, again, in that center of the state, in the southern part of Florida, outside of the Fort Myers, Naples area. If you're not familiar or you're from out of town, there's been tremendous migration into Florida since the COVID years in 20 and 21 and 22 and 23 and 24. It's continuing to this day. It has slowed, totally acknowledge that. We've seen some housing prices basically build inventory, totally acknowledge that, but people are still coming to Florida. And these are still very strong real estate markets. So down in the south in the Fort Myers area, we give you a statistic. Polk County is actually in the news as well. The Daily Mail in the UK just came out with a story. Polk County was recognized as the fastest county with population growth. Obviously, it's got to be on a percentage because we're talking about a whopping 30,000 people. But over the last year, this is just from 23 and 24, we saw tremendous growth percentage-wise into Polk County. And where's Polk? This part up in the north where the concentration is, Lake Wales and Ridge National, all those big orange dots are substantial land holdings in smaller areas in Polk County. So we feel as a company, although we are the largest citrus producer, the land that we own is basically strategically located if we decided to go down a more comprehensive, diversified real estate strategy. And right now we're operating citrus. We're doing it with the best. We've been doing it for a long, long time. We think the floor value of our company is the assets, and the assets we have are very well situated. Do we have any transaction experience? Well, yes, we do. A year ago, we sold the last parcel of what was a 69,000 acre cattle ranch that we had been selling small parts of since 2017. We sold this chunk to the state. We recognized about $77.6 million of proceeds. And that completed 25 different buyers buying those land parcels with the state and private buyers to the tune of about $226 million. We've sold not only to the state, we've also sold some citrus land to some private buyers as well. Most recently, we did that back in June at about $9,000 per acre. So selectively, if we've got non-core assets, we are more than able to actually recognize the opportunities and deliver value back to our shareholders by doing those transactions. So what have we been doing with all that money? $226 million seems like a lot. Well, about 190 of it has been returned, either through voluntary prepayment of debt, or we've given it back to shareholders directly through normal return of capital type transactions. 87 million of that we've done since our fiscal year 2021. So our fiscal year is September, by the way. We've been a substantial dividend payer. We've paid dividends consecutively since around 1960. We missed 2 quarters back in 74, so it's a consecutive run. Basically, we had to restart in 1974. But since I joined the company in 2015, we've given back about $41 million worth of dividend payments. We've done about $10 million of buybacks through 10b1 programs. We've done a tender offer for a little more than $25 million. And we returned about $113 million worth of voluntary and amortizing debt payments. And what that does is we think it's really kind of strengthened our balance sheet. That gives us control over our own destiny. When I joined in 2015, Alico had just merged 2 large competitors into our public shell, which created the largest citrus company in the United States. And we took on a lot of acquisition debt to do that. So when I arrived back in 2015, we had about $200 million worth of debt. We've gotten that down to about 93, of which a little bit of is working capital right now because we haven't started harvesting just yet. But the big blue bar you see is about $70 million. That's term debt. Cost about 3.8%, and it is non-amortizing. It's basically bullet debt that we'll repay either in 2029 or we'll roll that over. And that basically is collateralized by about 50,000 acres worth of land. So we think that's pretty secure. We think we're a very good credit. We've got great relationships with our lenders. So we think our balance sheet is very, very strong. When we changed over to a non-amortizing structure there, we really lowered our debt service to about $1.5 million a year. So it is well within our ability to kind of weather storms and any sort of volatility due to weather in our normal citrus operations to be able to meet all of our obligations. We think that makes us a more attractive investment. So we talked a lot about real estate for the last few minutes, but I will remind you that we are a citrus company. We're on the far end of the supply chain. All right, we are the grower. All that we do basically is take care of trees, harvest fruit, and then we deliver it to the processors. The processors, in the case for most of our fruit, is going to Tropicana, but there are other competitors as well. The processor is responsible for basically squeezing those oranges, basically bottling it, and then they distribute it. They go to the retailers like the supermarkets, and then it winds up on your breakfast table. So we are on the far end of the chain. Prices have been good. We just renewed a very substantial contract for about 65% of our acres back in May with Tropicana. It goes out for another 3 years at prices that are between 30 and 50% higher than what we got in total last year. So what we need to do basically is continue to deliver volume against those high prices, and then we'll realize higher revenues, which obviously against our fixed expense base increase our margins, put more money in our pocket, and be able to return more capital to you, the shareholders. So we have been putting money where our mouth is. We talked about 2.5 million trees. We haven't really changed our acres. So what we've seen is we've got more producing acres. So there's more trees on acres. If there was land that we own that was fallow, so there weren't any trees on it, you see right here that you've seen our producing acres actually increase. So not only are we the biggest, we think we're the best, but we've also been the ones that have been investing the most. So we truly are putting our money where our mouth is. And you see from this chart as well, that our density is going up. So trees per acre is going up. And then you see the producing acres from the previous page basically ramping as well. And you see basically on the far side of the page, the shift between the young trees and our mature trees are basically increasing as the trees that we've planted are basically maturing now. And the reason that's a good thing is they give you fruit we can sell, and then we go from there. If you look on our historic financials, we are susceptible to weather. We're also susceptible to a disease that's affecting citrus trees worldwide. It's been around for 1,000 years. It's not anything new, but it arrived on U.S. shore, we think probably in the late 1990s to early 2000, and it's called greening. That's the colloquial name for this term. It's a bacterial disease that basically affects the tree's ability to absorb carbohydrates. And because that's compromised, the trees starve to death. And it's a fatal disease. It's very, very bad. There's no cure. What we've been able to do over the last 2 decades is modify our caretaking practices. So we feed the trees more often with smaller quantities. So they're able to absorb what we give them. They look healthy, they're robust, but they're in a weakened condition. Think about like if you were a runner and you get the flu, you can still run, but you're probably not going to feel very good, and you may not be able to run as far as fast. Trees are kind of in the same position. It's affecting everything in the state of Florida. There are 2 other major countries besides the United States that produce a lot of citrus. One is Brazil, and the other is Mexico. They're just starting to get greening down there. So the future for the supply base worldwide for citrus is not looking very bullish, but we have been facing this catastrophe for the last 2 decades, and all of our costs are basically built into a post-greening environment. 2 years ago, the U.S. government allowed us to actually start using an antibiotic called oxytetracycline and injecting it directly into tree trunks itself. And it does seem to work. That seems really scary. You're going to put antibiotics in a food supply. It is detectable within the first 90 days. So to be safe, the government and all of the citrus growers have agreed that we will have a 180-day window from when the inoculation takes place until we harvest. So we basically doubled the safety zone to make sure that there's no trace whatsoever of this antibiotic in your food supply. So we did about 35% of our crop the first year. We did substantially everything last year. So there's now 2 years to have OTC or oxytetracycline in our trees. And we're cautiously optimistic that we're going to see increase in both quantity and quality based on all these treatments that we put in. First year, the state of Florida actually through a grant program pretty much paid for all of our costs. Last year we got about 40 to 45% covered, and there's more that may be coming back. So it's paid for itself. It costs about 75 cents a tree based on the economies of scale of how we're producing today. So that's that. Here's the crazy part. In 2022, just as we were starting this, we had hurricanes come through. So it was Hurricane Milton down here. And last year, not a lot of bad storms, but the trees were still weak from the 2022 storm. This year, we had 2 storms come through Florida. We had Helene and we had Milton. Milton affected all the Alico properties, not in a devastating fashion, so we really lost no trees. But very, very high hurricane and tropical storm force winds definitely stressed the trees a little bit. Immediate impact of that would be the fruit falls off the tree, but it also continues to weaken trees to start. So we're cautious about what this harvest is going to look like. And we just started rolling trucks last week, which means we were picking the fruit and bringing it to the processor. That'll go on for probably another 3, 4, maybe 5 months. We will continue to evaluate how the crop is looking, and we will try to guide all of our investors in the street with some sort of announcement, probably in early January, about how we're seeing the crop come out. We just had earnings this past Monday and didn't offer any sort of guidance, and that's the reason why. We just have really cloudy visibility right now. So I mentioned that we've got one grove. It's actually, I circled it a little bit. It's outside of Naples, Fort Myers area. We started a process in Florida here. It's called entitlement. That's a code word for rezoning. So the rezoning exercise of taking something that's been historically agricultural with all the rights and privileges thereof to turn it into something more on the commercial and residential side is a long, complicated administrative process that has many, many checks and balances at the federal, state, county, and local levels. And we started with, of course, a 4,500 acre grove outside of kind of Naples in the area of Collier County. It is at the end of a development corridor. There's a lot of development that's already happened, but this is right across the county line on the Collier side. We're cautiously optimistic that we're going to be able to announce more details when we go public with the application process for the first time, probably in the calendar first quarter of 2025. And then, Lord willing, a couple years after that, hopefully we'll be concluded with that and it'll be fully entitled, which would open the door for a potential monetization event. What would that look like? Developers could come, as they have for some of our neighbors and peers, and buy the land outright now that it's entitled. I'm not giving any sort of forecast of potentially what that could be on a per acre basis. They could offer to partner with us, in which case we would split some of the upside when houses are built, or we can go in the development business ourselves, which is a bit of a long shot because that's not really our core competency just yet. But we've seen all three of those kind of operational models evolve, and we haven't made any decisions because we're not really at that point yet. But in Florida, we've seen all three of those kind of work. To kind of guarantee our success with a little higher degree of probability, in May of 2024, we hired a gentleman named Mitch Hutchcraft, who is one of the leading specialists who spent his entire 36-year career doing entitlement work for real estate projects in Southwest Florida. He's, in our opinion, the best at what he does. We're very, very lucky to have him. He's done projects that are literally adjacent to this property that we're talking about here. He knows all the players. He knows how to get it done. And he is really kind of basically streamlining our timeline. So we're very, very proud that Mitch has joined our team. In addition to this project, he's helping us look at the other 30 properties that we own to see kind of what the highest and best use for they would be and how we potentially can monetize those for highest and best use as well. On the ESG front, ESG is part of our DNA. We are not a very attractive ESG company, and here's why. Florida is basically a peninsula, beaches on either side. If you go out, there's not a lot of soil, it's sand. We're growing 5.5 million trees on sand. For them to be agriculturally viable, we need to use fertilizer and chemicals, a lot of irrigation, that requires fuel. The ESG community doesn't seem to really like those kind of inputs. So we get bad marks, but we have 5.5 million trees. So we've got the best carbon capture tool you can think of in the world, but we get no credit for that. We do our sustainability reports every year. We just published a couple weeks ago for the 4th time because it's the right thing to do. We want to give you, the investors, the visibility into what we're all about. We, for 100 years, have always treated our people fairly. We basically respect each other. We consider ourselves stewards of the land. And we're going to continue to basically put these news out there, good or bad, so you as investors can basically make your own decisions. But we're not going to show up on anybody's ESG portfolio or profile. So in summary, if we're going to look at Alico as an investment, we get strong financial performance. We've got about $275 million of EBITDA over the past 6 fiscal years. Nothing to sneeze at. We just discussed that we've got an improved supply agreement on 65% of our acres that's going into effect right now for the next 3 years, which has 30 to 50% increases. So if I can continue to basically demonstrate increased production volume against higher price points, I should be able to deliver better financial returns for you. But I do have ample liquidity. We renewed and expanded a $95 million revolving line of credit with MetLife. And instead of having to renew that as we had with the prior lender every couple of years, that's in place now for 10 years. Goes out to 2034. on very good terms. Med is the one who actually basically has lent us on the term loan. So we consider our balance sheet very, very strong, but we also have ample liquidity that we haven't tapped either. Going across, we are covered on the sell side by a company called Roth Capital. Jerry Sweeney is our analyst. Great relationship there. We're about 70% institutionally owned, and we're a semi-difficult company to comp, but if you looked at other companies that have strong agricultural assets, maybe they're active in the lemon market, we think that our trading multiples are substantially discounted to where they are, probably because we're just unknown. We don't have a lot of research analysts talking about us, and we've never really done capital markets transactions. So this is really the only opportunity for us to get our story out. Spent a lot of time today talking about our real estate strategy. We sold 69,000 acres. That's not a bad track record. We've realized about $226 million of proceeds, but more importantly, we returned that capital. And we have those mineral rights in our pocket as well. Undisputed leader in the citrus space, and we've got a great relationship as a partner with Tropicana. Down on the bottom, we've given back $189 million worth of capital, both on the debt side as well as returning it to shareholders. And we've been putting our money where our mouth is by not only inoculating those trees, it takes money, but putting more and more trees in the ground. We've been doing this for about 125 years, and we're looking forward to doing it for another generation to come. With that, I'll stop. See if anybody's got one or two questions. We got a couple minutes left. Sir?
Are the properties for sale around Polk County, are those citrus or non-citrus?
So everything, with the exception of one grove that's got 5,000 acres in Collier County, everything in our portfolio is a citrus grove today.
What are you using the 5,000 acres in Collier County? You said it's just pasture land.
Cattle pasture that we lease out to one of the leading cattle farmers, cattle grazers.
What prompts the sale of non-core assets such as the pastoral land or the cattle range, 6,000 cattle? What prompts that, or are they all up for sale now?
So, as a public company, everything is for sale at a price. We've got internal analysis on what highest and best use, so we're able to recognize what is a good price. And then we have to really figure out where we redeploy that capital. So selling just to sell doesn't make a lot of sense. It really comes down to the economic viability of the current use, which is citrus, against what the potential highest and best use for some sort of alternative.
So you're not reaching out as much as it's out there, and people have come to you and said, I'd be interested in this.
They do. And we know whether that's an interesting conversation to have or it's an insult. We don't take any of the insults personally. Everybody's got to put their own money to work. But we haven't given away the store on any transactions in the last 10 years. Sir?
With your oranges all being grown in Florida and, potential protected disc acts, I mean, is there a premium on this orange juice? If I go to Publix, I think it's a blend a lot. It's not all Florida oranges, right? And so as a follow-up to that, John, is orange juice truly a commodity, or did you say that yours is better than something that's brought in from a couple thousand miles away?
So we actually grow the oranges, which is a commodity.
Yeah.
It's blended because there's not enough oranges grown in Florida to meet the needs to keep Tropicana and Simply and Minute Maid and Florida Natural on the shelf. So they're importing juice that's squeezed down in Brazil or Mexico, and that's being brought up. So as far as tariffs and all that, that's a whole other conversation. But they've been importing the juice itself that they would blend up here, and that's been going on for a few years, definitely since 2017. It's not getting cheaper, right? Because the supply base is contracting. Brazil just had a major drought, so their supply base, multiples of what Florida produces. We've seen Florida production come down as well. The supply base is shrinking. The demand looks like it's relatively stable. Prices are going up. Sir?
Where did the breeding originate? And why is it only now getting down to Brazil?
It's been around for 1,000 years. My understanding is it originated from Asia. And we did a really good job of basically protecting, cargo that was coming in and out.
Can a tree survive the breeding?
Without extraordinary treatments, no, it dies. So it eventually made its way to get contaminated somehow down into Brazil in recent years. just as it took a long, long time for it to actually reach Miami. It came in through Miami.
With more than 6,000 small and micro cap companies listed, if you're looking for the next Apple, then Channel Check truly is the orchard. It's an investor community where you can access independent Wall Street research, advanced market data, balanced news, corporate videos, and podcasts. You can even register to attend in-person Meet the Management Series lunches and to be part of the preeminent annual Small and Microcap Investor Conference, NobleCon. And here's the best news. Since Channel Check is sponsored by the featured companies, premium membership requires no investment. It's absolutely free. So check it out. Log in today. Find out why Channel Check is North America's leading source of research on the companies that just may change the world.